Good morning, everyone, and happy Friday. So far this morning, stocks are looking pretty good. Tom, how about those block earnings in after hours yesterday? Square or Block, whatever you want to call it, is one of those growth stocks that have just been beaten down significantly over the past couple months. And it's been a rough earnings season so far, but I think it was pretty relieving to see Square move the way it did, and it's definitely one of the best-looking stocks so far today.
Yeah, that was some really good movement by Square. And initially, Mike, the stock was all over the place. It wasn't really moving too much, but then they had that conference call and some good guidance, and their stock just exploded to the upside, which was awesome. They moved above 120 a share at one point, having an amazing move. And Mike, on my watch list, of course, Square is leading the way up 20%. We have some of the airlines also right behind them, not up 20%, of course, but they're definitely breaking out in a big way with American Airlines up 2% and starting to run.
True that. So I just want to check something out on Square really quickly. So it's up over 20%, which is awesome. And just looking at, it didn't load yet. I was trying to see how much the options are up, but Thinkorswim's doing that weird glitch. So it'll load in a couple minutes. But either way, yeah, that's awesome with Square. Also, just the market by itself is doing pretty good this morning. I know we were talking about this before the stream, but it's like, Tom, the market's just like freaking out for weeks and weeks and weeks on how Russia might invade, and then literally on Wednesday night, we see a full-scale invasion of Ukraine, and then the market's like, all right, we love this news, and it pops up. It's like, what?
Yeah, it makes no sense at all. Like, how could that even happen? Like, why would the market rise after they actually did the invasion? Like, you would definitely think that it would start to fall down. Of course, RSX was down, but even RSX recovered up a little bit yesterday, so kind of crazy. I just can't believe the movement that we've been having, Mike, and the SPY is once again this morning up in a pretty good way. But I will say we have to be pretty careful, because with the way things have been going, you'll wake up, the market's up, and then by the end of the day, the market might be all the way down below the lows of yesterday or something. So we'll have to be careful with it, because it's definitely been all over the place, and I would not be surprised at this point if we whipsawed back to the downside.
Yeah, just like the COVID crash of 2020. It's like, you'll have these awesome green days, but it's like, don't celebrate too quickly, because it could be shorts covering, it could be investors thinking it's the bottom, and then the next thing you know, like, you're right back at those lows. And I think Hondo pointed out in the Discord this morning that, the SPY yesterday was at 410, and then it was at like over 430 today. Like, that's a giant swing for the S&P 500. So there's a lot of volatility in the markets, to say the least, and there's also a lot of great opportunities. So don't be afraid to buy the dip with stocks you want to own for the long term.
Yeah, definitely. And there's lots of good ones right now. I know some of my favorites are Disney. Disney's recovering up in a good way today. I really like them. I think that they're going to be one of the safer ones. They're not going to crash and burn, but they probably won't grow as much as stocks like NEO or like XPEV or like Lucid and stuff like that. But in the end, though, I feel like it's going to be a pretty safe longer term play. Another one, Mike, that I've been eyeing up a lot is Matterport. And for some reason, this stock just kept getting destroyed. I know they had some bad earnings and stuff like that come out, but they just kept getting destroyed there for those few months. And it looks like they're starting to recover back up now, along with a lot of the other growth stocks. It's not just Matterport. We have like Unity recovering, Square's recovering now. We have PayPal even coming up a little bit. So it seems like a lot of these stocks are forming some good bottoms down here.
Oh, absolutely. I think we can definitely tell, just like you pointed out with Square, PayPal, good old DraftKings, and a lot of other ones. So awesome stuff there. So that's awesome to see that they're recovering, Tom, because I was looking at them yesterday and it was just brutal.
Yeah, JP Morgan looks like it's almost following the S&P 500 a little bit. It fell down, kind of hit that low of yesterday around 140, and we are recovering up today in a major way, Mike. We're starting to fill that gap back to the upside. Looks like there's a bit of resistance around like 148, and we are getting pretty close to that. So hopefully we keep recovering and we fill that gap. I think that would make for a pretty good play with the banks. Like you said, Bank of America is doing well. Goldman Sachs is recovering. So yeah, it looks pretty good across the board for them. And then what about some of these value plays, Mike? I know some of them have been doing pretty well lately. I wonder if they're still holding up. Like Coca-Cola. Oh, wow. Coca-Cola is really coming back along with Pepsi. Let's see, like Triple M. Yeah, Triple M's even coming back a little bit. So it seems like the value is coming up too.
True that. True that. And I will say really quickly is like, while we are seeing some stocks really explode to the upside like Square and like even some of the airlines like you pointed out, Tom, like my watch list is still like 50% green, 50% red. Like some of the stocks we have deep in the red are Beyond Meat, that's getting destroyed. AI is taking a bit of a hit. DraftKings is down a little bit today. It's down like 2%, but then again, it did explode yesterday. But it's just something to keep in mind because it's like we're definitely not seeing the same type of momentum that we saw like yesterday at market open.
Yeah, yesterday was pretty explosive. Like, look at DraftKings yesterday. I know that we were initially pretty sad, Mike, because, we woke up that morning. The S&P 500 was at lows because of all the invasion stuff going on overnight. And then it made a lot of these growth stocks gap down. And then for some reason, they just all recovered right back up at open and then some. I could not believe that DraftKings rose above that high of the previous day, up above $21 yesterday. It blew my mind that we were able to recover that quickly, especially after that invasion overnight. So definitely some crazy movement. It looks like it is coming back down at market open. Like you said, it's down 3%, but we did close at a very high level here. It looks like a lot of stocks on my watch list are in a very similar move, Mike. Looks like Rivian has a very similar setup. Like you mentioned, AI, Roblox. It looks like they are all kind of pulling back today a little bit. Even though it almost looks like the growth once again is moving in sympathy with each other. DraftKings, Palantir, AI, Run, ChargePoint. They're all in very similar setups.
Absolutely. Alrighty. Let's see what we have going on. Peter said Square in the money calls are up like 180% to 400%. Yeah, like what's interesting though is, Square's up 22%. And let's say I went to like the March 18th expiration. Like if I went to like the 115 strike calls, these are only up around 200% right now, which is a lot. But for like a 22% move, you would think that the options would be up a lot more. I think it might have been Sean in the Discord yesterday. I think he pointed out, I think it was Net, or I think it was some cybersecurity stock.
It was Net.
Yeah, so like that thing I think popped up around 7%, maybe more than that. But either way, like those options were up like 12,000%. So it just goes to show you like when you're looking at short-term options trades, in this market, you really have to check out that pricing because Square's up 20%, and I mean the calls are only up like 200%, which is a lot, but it's not a lot for a 20% move in the stock.
Yeah, I would have expected a lot larger of a move personally. That's like you said, 100 to 400% is pretty good, but when a stock rises 20%, in the past I've seen tons of 1,000% plus moves, like we mentioned with Net. So. I would have been expecting more movement out of the options as well, but it looks like the IV got crushed because of those earnings. So once again, it looks like the earnings dampened the options movement. Like we always talk about, Mike, that's why earnings are not fun to play. You have the stock go up 20% and, you wake up all excited and then you're only up like, 100, 200%. I mean, it's still good, but, you would have definitely expected a little bit more there. But yeah, a lot of these stocks on the watch list, it's just like the airlines moving today, Mike. Square's having some good movement. I am seeing some of the oil stocks come back up a little bit, like Exxon. It looks like Oxy's kind of holding its ground as well. So we'll have to eye up the oil market. But I will say crude oil itself is actually down pretty low. It's down at 91.66. It's pretty far off $100 that we hit yesterday.
Huh. Yeah, it is definitely pulling back a little bit. So that's interesting. And Tom, it's like Exxon's actually popping to the upside, though.
Yeah, it's so weird. And then yesterday, Exxon was moving down after oil popped up to like $100. So it's just been insane to see how these oil stocks have been moving. They're going to get crazy. I don't know. Obviously, Exxon's like in the middle of its range right now. We're kind of hit on that like $77 resistance. It looks like it might break that to the upside today. There is a lot of momentum at opens. So definitely looks good looks good for the oil stocks today, Mike, but slash CL is just, it's still like holding down. Like I would say if crude oil falls below 91, we might see these oil stocks start turning back around, but who knows, Russia might start doing even more stuff. And I've seen some terrible videos the past couple days. So hopefully the tensions calm down, Mike, and maybe the oil markets will get back to normal here soon.
True that. Same with like a lot of these other commodities too. Like the last time I checked, wheat was actually in a limit up yesterday. It ended up getting removed from that limit up. It's just /ZW, Tom, the futures, /ZW. And now it's coming back down, which is a good sign. Like even soybeans, which is /ZS, those are pulling back significantly. So that's good. How about corn /ZC? Yeah, I mean, they're all pulling back. So that is good, though.
Yeah, it is. It's good to see that. In my opinion, I like it because, we've seen inflation just going through the roof lately. Like, look at these futures on the 1-year daily chart here. Like, look at the price of corn, guys. Like, this is insane, just for corn. So hopefully we keep seeing that it start to consolidate a little bit, Mike. I know it's down 3.8% today, but it's definitely volatile. We were up around those highs of at the beginning of the year. So there's definitely some movement to be had here. I was really hoping that gold and silver would start to go back up, Mike, but it looks like GLD is just continuing to consolidate and sit down here at lows a little bit longer.
Tom, we have Cornish saying, hey, corn never pulls back.
That's right, Cornish. He knows.
Gosh. True that. There we go. Mike said, good morning, everyone. Happy Friday. This market is insane. Yes, it is. He said, thank you, Mike and Tom, for cautioning me to grab UVXY yesterday. I definitely would have lost out on that trade. Yeah, it's been tough, so thanks for that comment. It's been tough with, I guess you can say, volatility hedges. Like if we look at UVXY, like you suggested, it was at like $20 yesterday. While it like can still be a good hedge, it's just like you really have to have a lot of exposure to the S&P 500, and then it's like at that point, if you already have a ton of big exposure to the S&P 500, it's almost like maybe you just buy like some SPY puts. But yeah, for sure. I mean, hopefully the market just calms down. I will say growth stocks are definitely holding their ground very, very well. I think Square's earnings was awesome to see, Tom, because if we're being honest, like we have not really seen any really, really good earnings reactions this earnings season. Like, yeah, sure, we had Google report good earnings in the split news, but their stock tanked down. Like, the market just didn't really care enough about the split in their earnings to hold it up. And maybe Square can kind of change that because we have Zoom reporting pretty soon, So I'm hoping that this Square action can hopefully maybe shift some sentiment just across the market as a whole. And maybe I'm just being a little bit too hopeful.
Yeah, maybe. Who knows? But I hope the sentiment gets better as well, Mike. Obviously, it was great to see Square go up. Like you said, if they end up holding their ground, that would be some pretty good news. Even Enphase had good earnings and they fell, they fell over the next couple days. So hopefully we see Square stay up. I think there's a good chance, Mike, because the thing that I'm seeing that I really like is that Square's up. And we saw a lot of the other growth stocks doing well yesterday also. Like we talked about, DraftKings was up. Matterport, Unity, a lot of these big growth plays were starting to pop back to the upside. And if we continue to see this move up, it's going to move all the growth stocks in sympathy. Like we've been saying, ChargePoint's in a similar setup, Run, DraftKings, AI, they're all moving in sympathy with each other pretty much. And as we start to see them rise, it should bring them up. So hopefully Square continues to just move well, Mike. It would obviously be the best news. And like you said, we have Zoom's earnings coming up pretty soon. And I know AI is going to be reporting over the next couple of weeks also.
Awesome. Yeah. All right, cool. So just doing a quick scan to see some of the other movers we have so far today. Give me 1 minute. All right. Looks like Uber's looking pretty decent. Uber is trending pretty well. I mean, it's nothing crazy, but it's actually not that great.
It looks just like every other growth stock today.
Yeah, I had it on my scanner for a second, but it's actually not that good. Never mind about Uber. Apple's trading lower. Yeah, I'm
Here's
not really.
Pfizer doing pretty well.
Yeah, Pfizer's doing pretty good, pretty good. Tesla and Apple are kind of tanking off. I don't know if you saw that. Like Tesla's down almost 2%, which it's like it's a lot, but it's really not a lot for Tesla.
Yeah, this one even Tesla is kind of setting up like the growth plays a little bit. It ran up in pre-market pretty well. It's just giving a little bit of the gains back. If we got to the low of yesterday on Tesla, we'd be looking pretty bad today. So hopefully we stay up here around the highs. Like you said, we're already down like 1.5 or to 2%, and we're not even really down that much. So yeah, hopefully it holds up. Some of the bigger stocks, like you mentioned, let's see Apple. Apple's in a very similar setup too. Microsoft, same thing. So it's kind of a weird setup, Mike. Like a lot of these stocks are starting to pull back at market open. They're not necessarily dropping in a major way, though. They're kind of holding their ground. So that does give me some confidence that we do have a chance, I think, to rise over the next couple of hours. It might take a lot of consolidation before we finally start seeing some good moves.
Yeah. All right. What else do we have going on? I think MCLH is looking decent. The cruise lines are looking decent. But actually, it's not even that good. Like, it's on the breakout scanner, but it's like, it's not even really breaking out with that much momentum. So that kind of sucks. Tom, are you seeing any good movers today?
Man, I'm actually going to link my chart to my watch list really quick and just kind of like go down the list because we have Square leading. We have Exxon. Exxon's still running to the upside. So maybe that'll be a little bit of a pop back up today. We have like the airlines are starting to recover back. Like I talked about earlier, Mike, Coca-Cola is actually having a pretty good move. It's up 2%. That's pretty big for a slow mover like them. Look at AbbVie. I know that you've liked ABBV a little bit over the past couple of years, and it looks like they're also on the uptrend, which is nice. I know that they're kind of in that healthcare sector, kind of like Pfizer is. So looks like those two stocks are doing very well today. I know that Moderna had earnings earlier this week and they flew up with them, but they're also kind of pulling back today. So looks like maybe Pfizer will be a pretty good play in my opinion. It looks like it's breaking that high of yesterday in a good way. Same thing with ABBV. I feel like those two might be some pretty good stocks to look at today. They actually have some good momentum.
Awesome. Yeah, so it looks like the value type plays are just kind of stealing the show while the growth plays are pulling back a little bit. And while this is like not ideal, it's like the growth plays did have such an insane day yesterday, which is good to see. How about we take a look at DraftKings, Tom? We like to look at this one. So DraftKings is down around 4% today, but it's still significantly higher than yesterday's opening price. What do you have for support levels coming up?
Yeah, for DraftKings, as far as like a good intraday support, I have one actually right around $21, and $21 was a pretty big resistance on DraftKings over the past couple of days. We had some issues breaking that to the upside. We did finally break it yesterday towards the end of the day though, and we had a nice move. And we can see that this morning DraftKings fell and we're consolidating right around $21. So this will be a pretty good support here. If we keep going down, the next major one I see, Mike, is right at $20 even. That's a big psychological level as well. Obviously, it's just one of those big whole dollar levels. So $20 even after that. And then below 20, I have another one down there around $19. So looks like the whole dollar marks on DraftKings are the big movers, at least over the past couple days. But yeah, I mean, I would say $20 even would be the main level I'm looking at if we break below 21, which we're sitting at now.
Gotcha. Alrighty. And then let's see what else we have moving. I mean, to the downside, we do have Palantir down around 5.5% today, but I would kind of classify this one in the same setup as DraftKings, especially over like the past couple days. Like Palantir had such a great day yesterday where, while it's down 5% today, it's still significantly higher than yesterday's price. We're also seeing some of these China plays come down. What else do we have going on? Apple's coming down a little bit. How's the VIX looking?
VXX, let's see. Actually just kind of staying flat today. It's not popping up, but it's definitely on the downtrend if you count overnight. Let's check the VIX index itself. Yeah, the VIX index is just kind of staying low, around yesterday's closing price. So definitely not too much volatility yet, Mike. I know that with the market doing well, the VIX might start to pop back down, but we'll have to see. If the SPY continues to trade lower today, then we might see the VIX. Well, the VIX will probably pop back up then, but I don't know what we're going to see today. It's been such a crazy past couple of days with all the invasions and everything like that. And it's just like we talked about earlier, it's crazy to see the SPY up in the green. I would think that we would start to see it fall down a little bit more, but I'm not banking on it today with the way the market's been moving, Mike. It seems like lately, whatever happens, the market goes against the majority. Like people were probably shorting the market with those invasions, and then the market pops right up and screws everybody. It's like, man, the market lately is just it really seems like it just goes against whatever like the overall sentiment is.
Buying high and selling low, Tom. Oh, gosh. But yeah, I agree with you for sure. The market definitely likes to go against the majority. And, I've actually been seeing a lot of, like over like the past week, whenever I look at, I don't know, like I guess you could use as like an extreme example, Wall Street bets. There's a lot of people talking about how the economy is going to go to, fall apart. The market's going to go and lose 90% of its value and this, and that. But it's like, now's the time to buy the dip in stocks that you want to own for the long term. Like, so many people, including myself, looked back at the COVID crash and I was like, dang, like I wish I bought the dip in the time of peak fear. And while this Russia-Ukraine invasion is terrible, and while I hope everything gets resolved as soon as possible, in terms of like a stock market perspective, if you've been wanting to own, or at least start a long-term portfolio, now's the time.
Yeah, it really is. There's so many stocks at good levels. Like we talked about earlier, there's even some bigger stocks like Disney at decent levels. You have Facebook at a huge discount. You have Twitter, even Snapchat. I know that some of these aren't the most popular right now, especially with like DWAC and everything like that. But in the end, though, they're at big discounts and they're probably not going to go anywhere anytime soon. And as we know, their sector has been pretty explosive over the past 5 years or so. And I feel like some of these stocks should do well, like Snapchat, for example. It's actually recovering up in a pretty good way from its lows, which is nice to see. I know that their earnings were pretty bad, Mike. Like they flew down and they flew right back up the next couple of days. So pretty volatile on their earnings there. But yeah, I mean, lots of these social media companies are low. Disney's low. Even Netflix. Like I cannot believe how low Netflix is for a streaming company.
Yeah, that's true. That is true. Yeah, I kind of forgot about that one. I might have to sell some puts on it or just get some shares or something like that. But yeah, good point there. George mentioned how Enphase is above 150 again. It's been a while. Enphase actually took a pretty tough hit when it was at like that $260 level. Like Enphase back in November of 2021 was around $282 a share, and they just got destroyed all the way down to like 114. But yeah, it's right around that $150 level, just like George mentioned, and it's definitely a good play for the long term, in my opinion. If you want more exposure to the solar industry.
Yeah, definitely. That'll be a pretty good one to pick up, I think, Mike. It's been honestly moving pretty well off the lows. It bounced off like that support down there around like 120, doing well. Like you mentioned, it's starting to come up. So I like it personally. It's pretty good. And another good thing about Enphase is that the IV isn't at the highest it's been. It's still pretty high relative to the past, year or so. But, we were just at over 100% just over the past month. So I'm glad to see the IV dip down a little bit. At least that helps the calls slightly, so that's good. But in the end, I mean, I think shares will be great to buy here. But if we start breaking above 150 in a major way, Mike, hopefully we continue to see a nice push up, because this stock is another one that's been beaten down. It's kind of around support, and hopefully it holds up.
Awesome. Alrighty. And then we have Vicky asking for levels on Facebook. Thank you, George, for all of your support. And then Tom, so I called out Facebook as a day trade in the Discord free day trade section this morning. Thank you, George, for pointing that out. I have a resistance level right around like 208.85. I guess you could call it 209 if you want to round up a little bit. But, let's say we blast through like 209. What's the next major resistance level?
Yeah, let's see. So for the next major level, because I know there's lots of like small intraday levels, especially on Facebook, because it's been so up and down over the past few weeks. But I would say if we break this level, Mike, the next major level that I'm seeing is going to be up somewhere around like 214 to 215. I think that's going to be a pretty good level. We've had a few bounces there over the past couple of months. It's pretty close to this blue resistance level that I have on the chart here, give or take a couple dollars because Facebook's been all over. But I would say like 215 would be the next major level. And that would make for a pretty good rise, Mike. Like if we break above 209, that would be like a nice like 6-point move out of Facebook. And I think that would make for a pretty good day trade if it ended up playing out like that. I know I called out Facebook yesterday and it ended up doing very, very well. So hopefully we see it break and start to run up again. I think that would make for a pretty good bounce. And one thing I also like about Facebook, Mike, is that we're above that $200 support. So if you're looking for a good support, Vicky, $200 is probably going to be the main level there.
Yeah, for sure. And then I would say there are some like minor supports right around 204 as well. You could even say like maybe around 200, Tom. 200 is a giant level, and then just a minor one right around 204.
Yeah, definitely. Definitely watch that 204 level too, because we kind of bounced like right around there this morning. So that could have been like a good small intraday level to look at. What I've been seeing, Mike, is there's usually a pretty good support, a pretty good resistance. Then there's usually like one or two smaller levels in the middle of the range. And it looks like 204 is looking like one of those nice smaller levels. So hopefully we just continue to see the nice movement. We almost just broke out, Mike, but it looks like it's kind of rejecting again. So hopefully we see that breakout sooner rather than later with Facebook. And for the long term, Mike, like I just feel like this stock is at such a good price point. I don't know if you saw the news with Facebook this morning, but I actually saw some negative news that said that I thought I saw something that Facebook, or they're now called Meta, was actually dissolving their VR team or something like that. I don't know if you saw that either.
No, I didn't see that.
It was actually in our it was actually in our popular news tab this morning. I'm gonna go find it really quickly because I don't want to, okay, I found it actually. I'll bring it up on the screen so we can see. It actually says Meta Platforms dissolves team developing new AR and VR operating systems. So I don't know what that has in store for Facebook, but either way, I mean, their stock's doing pretty well today, so it looks like the news isn't too big either way.
Yeah, I wonder why they would even do that, though.
Yeah, I'm curious as well. I was like, man, like, because you would think that with them getting into Oculus and stuff, that they would kind of, want to keep that team there and at least expand it, not get rid of it.
Yeah, that is weird. Yeah, I'm looking into that a little bit more.
They did say that it was just the team developing the operating system. So
yeah,
maybe they're doing this because they have Oculus, and maybe Oculus already maybe has a good operating system or something like that. So maybe that's why. But the good news is that they did say specifically the operating system, not VR in general. So that's good.
Right. I'm sure there's a lot more to the story that little update is not covering, because their VR business is definitely growing, and Facebook isn't stupid. They're not gonna limit that growth. So yeah, good eye there, Tom. What else do we have going on? We have Hornet saying thoughts on Tesla to the downside. I don't know. I mean, I would not classify it as like a grade A setup. Like, can it fall lower? Absolutely. But it's like, is it a setup where I'm going to trade it? No. It's just not a grade A setup in my opinion. And I would say something that's kind of important to keep in mind is like, if you wanted to play Tesla to the downside, like their options are kind of expensive right now anyways. So it's like IV's at 73%, which is like, it's not as high as like some of these other companies, especially relatively speaking, but it's still elevated. So I just don't think it's like a good setup to like play that has like a positive expected value over the long term. So for that reason, it's just I'm just gonna stay neutral on that one.
Yeah, I personally think it can move a little bit lower, but one thing to keep in mind is that, for the past few weeks, I know I've been hitting on this blue trend line here. Or I should say Tesla has been bouncing off this trend line quite a bit the past couple of years. And lately we've been consolidating a ton right on this trend line and also right on resistance. So we've been failing to break out. We've been starting to turn back over. And I was pretty bearish on Tesla over the past couple of weeks. But what I will say is that we did have a big move down this week. We fell all the way down to $700. And just a couple weeks ago, we were at $900. And even before then, we were up at like $1,100, $1,200 around the beginning of the year. So we've definitely been falling down quite a bit. And me being someone who looks a lot at the technicals, I've been eyeing up Tesla a lot. And I've been saying, hey, I think they might go down. But like I said, they just had that big move down to 700. In my opinion, that was a big enough move, off of these trend lines that I would think at this point, it's just too risky to short. Like if you were still up here at the highs and you see some nice touches on resistance or something like that, and it starts coming down, it would have been a better entry there. But now that you're entering after the drop and now we're starting to recover back, I just think it's not the best time now, but I do think that there is certain times where you can get in at a good time. But like Mike said, the options are so expensive on Tesla. Like I don't even trade it really even, it's so risky. Even like at the money options that expire like today, for example, they're like an at the money call today is still like $1,000. So like, you're talking if Tesla doesn't rise today, you're out $1,000, and that's stuff expiring today. If we go to stuff expiring like in May at the money, I'm looking at $10,000 for one call option. So, even though Tesla can move pretty good, just keep in mind the options pricing is not the best. That IV's high, and with it being so expensive, I just feel like it's just not worth the risk right now. I would rather go maybe buy leaps on Disney or maybe short some puts on Netflix if I was going to be spending $10,000 rather than, getting one Tesla call.
Yeah, exactly. And then I was looking at the options pricing just like you suggested, Tom, and yeah, I mean, an at the money call today costs over $1,000. It costs like $1,100 to $1,200, and same thing for the put, obviously. But like, think about that. Like, let's just say for simple math, if you got the 785 put and you paid $1,000 for it, your break even's not till 775. So it's like. Let's say Tesla fell all the way down to 774. It's like, all right, you made $100 and you risked $1,000, and that's if it falls. So it's like, you just got to be careful with these options. You have to be really careful with any options you trade, any short-term long options you trade in this market because IV is so high. So great question, Hornet. And then shifting over into the next comment, we have Raymond saying, what are the prospects for a day trade on BABA and TCEHY to the downside? Let's take a look. BABA to the downside, he said. I mean, let me take a look again.
It doesn't look terrible.
It doesn't look terrible. It's just, I feel like a lot of support's coming up, Tom. Like, overall, growth is, or has been getting bought up quite a bit over, like, the past couple of days, and I know it's only the past couple of days, and that doesn't mean it's going to continue, but I feel like there's a lot of support around BABA right now, right around like 103.30 from like yesterday, and then even a giant support around 100. So it's like, while it doesn't look terrible, I feel like the same problem we had with Tesla, we kind of have with BABA. Like, yeah, IV's not sky high, but it's still elevated, and it'll make it harder to break even on like an options play.
Yeah, and then also we're already down like 4%, 5% today. So, like you said, we're approaching that support of yesterday, and then we're also approaching just the key $100 level in general. Like $100 is huge, and you can see that even though BABA was falling on their earnings, they ended up bouncing right around that $100 level. I'm sure there's a lot of maybe algorithms, maybe a lot of traders just looking to buy at that $100 price point. So definitely watch out for that. That's going to be maybe a maybe a good reason not to trade puts on this one today, but I will say so far it's been moving pretty good to the downside. It's just, in my opinion, we're already down 4%. I don't see this one going all the way down to 100 or anything like that. It's possible, but I just feel like that the expected move, like the chances of that happening are probably lower than higher.
Yeah, and like it's like the same thing with Tencent, which is TCEHY. You know, they can continue lower, but it just doesn't look like it's worth the risk. So good stuff there, Raymond. Mike said, "How's Coin doing?" Let's take a look at Coin.
Oh yeah, they had earnings yesterday.
Yeah, they're not really moving too much. They're down 5%, but they've been like a roller coaster over like the past day.
Wow, they have. But Mike, I didn't really read too much into their earnings yesterday, but I will say their EPS beat by quite a bit. They came in with a 3.32 versus a 1.953 estimate. So they really beat on that EPS. But as we know, especially lately, Mike, EPS isn't all that matters with these companies. We've seen tons of companies report good EPS and go down, and we've even seen some companies report bad EPS and then go up. So, that outlook lately seems like it's a bigger deal than the actual numbers themselves. And I guess Coinbase's guidance wasn't the best because they're definitely not flying, but I will say they're holding their ground, which is good. At least they are down 4%, but just like we've been saying with all the other growth stocks, compared to yesterday's close, that's not terrible.
True that. Yeah, I did not look into their earnings too much yet, so I have to take a look at those later. Ironical said, "It seems today the market is going down." Yeah, I mean, the SPY's technically still in the green. I feel like if the market does go down, I feel like it's not going to be the same type of movement that we saw over the past couple of weeks. Clearly, there have been a lot of buyers buying the dip and shorts covering, as we can see from yesterday's movement. And when you have a giant day like we saw yesterday, a lot of times we do see a small pullback, which is kind of expected, you can say. But yeah, I mean, even if the market does fall, at least I'm definitely not expecting to see, the same type of movement that we saw like in the beginning of the week.
Man, I hope not, but with the way it's been going, I wouldn't be surprised if we were below 410 by the market close today. Like, man, this whipsaw stuff has been insane. Like the way the market gaps down and then moves back up in pre-market, like almost like on Monday and Tuesday. Like we had that huge drop down from the weekend, or from the extended weekend, I should say. And then we flew right back up. And then obviously we gave all those gains right back. And then somehow we even recovered up by market close. And then we're almost back in the green. So this has been such a crazy week, Mike. I don't see us getting to 410. If we do fall, there's a big support around 427, kind of like what we saw as resistance yesterday. So that might be a big level to look at. 425 looks pretty good below that. And I know yesterday I was really eyeing up that upper level of 422. We finally broke that at the end of the day. So that was nice to see there. So those are some good supports to look at if we do fall. But I think I'm more with Mike today. It doesn't look the worst so far. And while it can turn around, I think that we'll have to see some pretty nasty Russian news come out, to turn this one around in a major way.
Yeah, I'm looking at the probabilities for the SPY today. The market is pricing in a 23% chance that the SPY closes below 425. It is pricing in a 7.5% chance that the market closes below 420. And it is pricing in a 1.19% chance that the market closes below 410. So overall, I mean, anything's possible, but yeah,
I bet those market makers have been getting destroyed the past couple weeks.
Absolutely, Tom. It's been brutal for them, but that they are going to make bank over like the next couple months because IV's so high right now, and you have people buying these options with insane expected moves where they're going to make it all back. But yeah, you're right. They got smacked over the past couple weeks.
Yeah, they are. They're going to make a lot of that back, actually. That's going to be a crazy thing to see whenever we start seeing everyone buying into, like tons of VIX calls and just buying up VIX in general and stuff. And then, as we know, a lot of these things end up decaying in the long term anyways. So it's like, man, like it's going to be rough. Those IVs are insane, especially on some of like the growth plays. I can't believe how high some of the IV's getting, kind of like what we talked about with Square before earnings. Like that IV was so high, it wasn't even worth playing the earnings. And then the earnings weren't even able to do well. Like look at that IV pop back down. Square's coming back down in the red. Like I'm sure some of those calls are still up, but if this keeps dropping today, some of those riskier ones might end up even losing.
Yeah, that's true. Wow, Tom. So I cannot even believe this. So the weekly chain today, Tom, for Square, let's say we looked at the 110 strike call. That's only up 62%, while the stock is up almost 17%. The 120 strike calls are down 50% from yesterday. Some of the deep in the money calls are up over 100%, but a 17% move in the stock and the 110 call is only up 60%. Crazy.
Yeah, that is insane. That is very, very low. Wow. I mean, that just goes to show you right there that IV makes such a big difference, guys. And there's so many issues right now with the IV being high that I just feel like traders have to be really careful. Whether you're looking at DraftKings, Twitter, Snapchat, Matterport, the IV is generally super high no matter what you're looking at. Look at Matterport. It's at 140%. It's right around the highs. And this is even after the earnings came out. So yeah, I mean, it's insane, Mike. Like you said, those market makers they're gonna make a lot whenever they're shorting these options over the next few months or as they're selling them to people, because oh boy, it's gonna be a fun time. But I will say though, as far as a lot of these stocks that are down, guys, just honestly, just look at getting some shares. Please listen to this advice. Just grab some shares for the longer term. They might not go up right away, but I feel like with a lot of these companies, you're getting it at a great price. And with the IV being high, I mean, I just feel like shares are just such a good way to go. And then you don't have to worry about timing or anything like that. And, I know for people with smaller accounts, it might suck to tie up, $2,000 or $3,000 for a year or something like that, if you're getting 100 shares of some of these companies. But, just keep in mind, maybe making 100% on $3,000 over 1 or 2 years is better than losing to high implied volatility options. I just think that's the better way to go.
Yeah, starting a long-term portfolio is always a great thing. We have Raymond saying DraftKings looks good for a short today with a question mark. I mean,
it's too late.
What'd you say, Tom?
I said it's too late.
Yeah, it is kind of too late. It's down 5.5% today. And this is also coming from people who are very bullish on DraftKings, Raymond. So this might be a little biased, but yeah, I mean, it is down almost 6% at this point. Plus, growth stocks have had a good amount of upwards momentum with them, just over the past couple days anyways. Shorts have definitely been covering with DraftKings. Buyers have been coming in. DraftKings was actually doing pretty good, actually, ever since I guess you could say the February 22nd. So I would say it's not a good short play, but then again, I'm biased towards DraftKings. They do have a pretty big support right around 20, but obviously I'm looking for them to the upside.
Yeah, me too. I'd rather look at them to the upside as well. I feel like it could have been a good thing to play to the downside if you would have entered at the right time, but we're already down 6% today. We had a huge move off this $22 resistance right to the downside. We ended up breaking below 21 after having a couple 1-minute bounces there too. So I don't know. To me, it looks like it could keep going down today, Mike, with the way the movement's going right now. But, we're approaching support. There's another one at $20, like you said. So I don't think it's a good play personally for me. And if we were going to go look at some stocks to the downside today, there's a lot of stocks moving down. So let me kind of look at my watch list really quickly. We have Fastly, bleeding off, and I would say a little bit more of a way than DraftKings is. Palantir's moving down, Matterport's moving down, Peloton's going down. Maybe Peloton would be a better option given that their company has been having some pretty big issues the past year. I know a lot of companies have, but Peloton has been particularly hit super hard. So maybe this would be a good one, but I don't know, Mike. Even though there's a lot of stocks going down today, I feel like compared to where they're moving from the lows, it's it's just not worth the risk right now. And, personally, I'm someone that likes playing stocks to the downside sometimes, but it's just today, I feel like that with the way they recovered from yesterday, it's just not the smartest thing.
Yeah. Yep, I agree. So let's see. Vicky said levels for AMD, please.
AMD, it looks like we're sitting up here right around $120. I would say today it's trading between a range. You can see it hit highs of 119.50, just about right around that 120 resistance. And then we also are bouncing off support at 116. I had all these levels on here before today, so it looks like 116 will be a pretty good support. Resistance at 120, of course. If we break below 116, the next major support I'm seeing is like 113.50 to 114. I think that there's been a few bounces right there as well. Below that, I would say 108. But if we do end up moving above 120 today, I think that could make for a pretty good breakout. As long as you are eyeing it up and you're getting into a quick scalp, I think it can be pretty good. But just keep in mind, breakouts don't always work out, as we've hit on in the past. But it does look like that's a pretty good resistance there. So if it does start running, it looks like a break of 120 would be good. As far as movement above 120, it looks like if we break 120, there's a little bit of resistance right around 122, and then above that, 123.
Sounds good. All right, so we have Muscle asking about, or he said, been sticking long with AMD. Do you think there are new levels coming for AMD, NVIDIA, and Intel? And he's basically saying, do we think there's new highs since they've been beaten down lately? So I think over time, these stocks will recover and end up breaking their highs. But over like the next couple months, I really just don't see it. Obviously, they're great companies. They're growing a ton. They're in an explosive industry. But I think it would take a ton of just movement and like momentum to have these stocks break their previous highs. And I just don't see it over the next couple months. Over the long term, I definitely do think that eventually, if they can keep up their growth, that they will break those highs. But just for the couple months, I just don't see it, and that's just my personal opinion.
Yeah, I mean, I don't see it happening in the next couple of months either. But I will say, I love these stocks for the long term. I don't think that AMD is going to go anywhere anytime soon. There's a big support at $100 even. I will say I've been eyeing up that support for a long time now. If we break below $100, it's not going to be good. So if we break below that, I could see AMD possibly falling towards maybe $80, maybe somewhere like that. Just keep in mind, AMD has been so explosive over the past 5 years that this stock is up a ton. Like if I go to the beginning of 2018 here and I go till now, AMD is up 959%. And if we go to the all-time high, it was up 1,300%. And that's just from the beginning of 2018. That's not even going back further. So that's a huge rise out of a chip company. So with it being up that much, you could almost expect it to keep pulling back. So while I do like it, I think the way to play it will just be to average in. Right now, if you like AMD for the long term, and let's say you have $10,000 to throw at the stock, I would probably do $1,000 now, maybe $1,000 in a couple weeks, maybe $1,000 a couple weeks after that, and then just keep averaging in until I'm in to the 10,000. I really think that AMD might keep consolidating, kind of like Mike said. I just don't expect it to rise in the next couple of months. But I will say I like this company for the long term, and I'm not 100% certain, but I would say out of almost every stock in the market, AMD and NVIDIA are two stocks that I think won't go anywhere.
Yeah, it just also comes down to valuation too. Obviously, these powerhouse chip stocks aren't going to go anywhere, and neither is Tesla. But it also comes down to the price you pay, because you can pay a bad price for a good company and still lose. So I would have to take a look at the fundamentals and just to do a quick little refresh. But I definitely know what you mean, Tom, and I don't see the companies AMD and NVIDIA going anywhere.
Yeah, and even as far as like their revenue and everything like that, it's been explosive over the past few years. Same thing with Nvidia. So while that's good, Mike, I will say you actually showed me something from the past that kind of blew my mind, and I want to show everybody else this right now. So if you're interested in AMD and Nvidia, Mike showed me this, and it's so interesting, guys. So really pay attention to this one. Intel, yeah, okay, of course, Intel hasn't been the best over the past couple of years, right? It's been very flat because it's had a lot of competition. But let's go back to the early 2000s during the dot-com bubble. Let's look at Intel, okay? It actually looks pretty similar to AMD and Nvidia right now, even similar to Tesla. Look at Intel. It ended up rising throughout the 90s from under $1 to over $75 a share. That is an insane jump. And then look what happened. The dot-com bubble came into effect. And what did we see happen? Intel, which at the time was the chip leader, fell all the way down to $14. And this just goes to show you that these companies can have a crazy valuation. Like Mike said, it's a big deal to look at those fundamentals, look at those valuations and stuff, because I think that the early 2000s dot-com bubble bursting is pretty similar to what we might start seeing now, Mike. And, a lot of people have been saying we're in a bubble right now with all the COVID plays, because what happened during COVID? We saw stocks like AMD go up at a crazy pace. Same thing with Nvidia. Same thing with Tesla. You name it. It's been going up at a crazy pace. And just like the dot-com bubble, some people are forecasting that some of these companies might start to tumble down. So keep that in mind whenever you're getting into AMD. Like I said, I would definitely recommend averaging in if that's the way you're going.
Yeah, and then another thing too is if you go back to Intel, if I remember correctly, their revenue and profits tripled from their 2000s level. So it's like...
Yeah, it did. It kept going up that whole time. Like, even though it was going down, like their revenue, their revenue might have dropped for maybe 1 year, but you can see they kept staying down low for the next like 5 to 10 years, even while their revenue was doing great, which is insane. And you can even see here on the bottom, like they've even been increasing their dividend and everything like that, and the stock still wasn't going up. So those valuations are so important. And I'll never forget when you showed me this, Mike, because I've been a big proponent of those bubbles in the past, and I really do believe that right now we're in a slight tech bubble again, and I feel like at some point we're going to see it, start to unravel a little bit. And I think we've already started to see it with the growth stocks. Like, honestly, the growth stock bubble already bursted.
Yeah, yeah, no doubt about that, Tom. I could tell by looking at DraftKings and all the other ones, but gosh. But I think it's like the main point is that it goes to show you that you can pay a bad price for a good company that's growing and still lose. So just understand that like valuation does have a pretty big role into stock prices. And then Muscle said that maybe in the future Nvidia or AMD might do like an Intel merger. Risk of a duopoly. I guess though. Thanks for the analysis, Mike and Tom. Keep up the great content. Thank you so much, Muscle. We always appreciate when you join the stream, and thanks so much for all the comments and support. Hunter said that AMD has a higher market cap than Intel, and it has 1/5 the revenue and 1/6 the profit.
Wow, that's actually surprising to hear, Mike. I honestly would not have expected that, because AMD has had a lot of hype lately. I know that a lot of people who build computers have been big proponents of AMD as well. I guess Intel, they've just been established for so long. I know they have tons of contracts with other companies and stuff, but wow, that's insane to hear, Mike. So that's pretty telling, actually.
It is. That almost I'm definitely gonna look at the fundamentals more, but like it almost makes me want to do like a hedge fund style trade where you like, let's say you think that it's just a random example, right? Let's just say you think that AMD is overvalued, right? That may or may not be true. But if you think AMD is overvalued, you can like short AMD and then you could like buy up all the other chip stocks. Basically, you like short the specific stock, but you long the industry. So it's like if the industry overall increases, you're covered. If the industry overall decreases, you're covered. You're just betting on like the values normalizing. So it's like, maybe we look at, longing Intel and shorting AMD to like do like a long short strategy. We'd have to look into it more, but it's just a potential idea. At the same time, with AMD having the hype and valuation that it does have, what's that telling you? It's telling you that the market expects a lot of growth in the future out of AMD. So, they definitely have a lot of high expectations.
Yeah, it's hard to that's the main thing. It's hard to try to balance out, is this company overvalued? But also it's like they're so innovative and they have so much good stuff set for the future that at the same time it's overvalued, but maybe they're valuing it at its price in 5 years or 10 years. So it's a hard market to try and gauge the exact valuations like that. And that's the main thing with fundamentals. It's really looking at the numbers and trying to digest as best as you can, where you think the company will be. And some obviously the data is set there, but like you said, sometimes like some of these futuristic companies, they can start running up just because investors feel like that they could be good. And one good example of that, Mike, is Rivian in the beginning. Rivian just started running up so much, and as we know, it was the third largest automaker while they had zero in sales. Like,
yeah,
that right there is like it's like mind blowing that it was the third largest automaker like that. But at the same time, people are buying it because they're looking 5 years down the line, 10 years down the line, and they're saying, well, Rivian just won truck of the year this year, so maybe they'll start to do a little bit better. But it's tough. They have production issues then to worry about and everything like that. So it's always good to look into everything because it's definitely a crazy market, Mike, and there's so much to each stock, whether it's fundamentals, whether it's outlooks for the future, whether it's price action in the short term. It seems like that there's just so much to worry about that obviously that's what makes trading so fun.
Exactly. Yeah, and great example with Rivian too. And then Vicky said, it does not matter the profit or revenue Intel has. What matters is the technology they develop, and AMD is winning big on that. Intel will not survive, watch it. And then Hunter said, Intel has more retained earnings than debt. It's hard to not survive that. So, like, my argument is, like, let's just say as an example, let's say we go back to Rivian, Tom. Let's say Rivian makes the best trucks around, they have the best technology, but if they can't get to, full-scale production and they can't, bring in money and they can't even bring in profits, it's like, yeah, Rivian might have the best trucks and technology around, but at the end of the day, if they're not making any money, their stock's not going to go up. Like they could have the best truck in the world, but it's like you eventually have to, not saying in the beginning, but eventually you do have to bring in revenue and become a profitable company. So, that is something to keep in mind.
Yeah, it is. And kind of going back to like what Vicky said about Intel and AMD winning the technology wars. Yes, they are winning the technology wars. And one of the big reasons is that AMD has been developing graphics cards or graphical processing units, if you want to get really technical with it. But those graphics cards are used in AI a lot. And they're even used in like electric vehicles to run their AI systems and stuff like that. And that's where AMD is better than Intel in that sense. AMD has also been developing some really good CPUs that are very competitive to Intel's. Are they better? Some are better than others depending on the price points. If you spend the most you possibly can with Intel, Intel's better as far as CPUs go. And that's getting the most expensive ones on the commercial market, not privately sold to maybe some car manufacturers or something. There might be other stuff like that. But as far as the technology goes, I mean, Intel's still pretty big, like as far as people who build computers and play games and even people who like process videos and stuff, it's still a really good processor. And also Intel, there's been a lot of rumors of them getting into the graphics card market. And if they get into that market, it could disrupt AMD. It could disrupt NVIDIA if they get in the right way. So, while they might not be doing the best now, keep in mind, their research and development team is on full blast right now, trying to get stuff going. And their chip architecture is still pretty good. So, it's not like they're going to, just go anywhere anytime soon. But I definitely know what you mean. AMD has had a lot more hype this year. And just like we've seen in the Discord, Mike, like there's GIFs of Conor McGregor like ripping Intel in half, and AMD is like over McGregor's head. Like the memes have been against Intel a lot lately, which is part of their thing. It's almost like Intel for some reason right now almost has as much hate as the hedge funds who shorted GameStop for some reason. I'm kind of like my mind's blown why everyone's hating on them so bad, but I guess it's just the stock movement.
The memes are against them.
It's true.
Yeah, it is true. It is true. So then Vicky said, that's it, Tom. The future is in AI and everything we do. While that might be true, Vicky, think about all the companies back in, 2000 or like 1999, 1998, where everyone was saying technology is the future. A ton of those companies do not exist today, even though the statement that was used to back them up was correct. Like a bunch of people looked back and, I guess you could say a bunch of people looked back to like the 2000s .com bubble, and while the, I guess you can say, argument was true that technology is going to become more and more important and involved in our life, like a lot of those stocks went bankrupt. Like even look at Intel and Cisco. Like technology has grown tremendously over like the past 20 years. The use of semiconductors has grown tremendously over the past 20 years. And look what happened to Intel stock price. And
even Nokia. Nokia is a big one. And Nokia, why were they so big in the early 2000s? Because phones were getting to be, obviously, they were becoming mainstream. Everybody was talking on cell phones, using the phone and stuff. And look at Nokia. Even all the way to today, they never, ever recovered back. And I guarantee you during this time, I know that Nokia was one of the biggest phone brands. They had those old Nokias with like all the buttons on there. You had to press it like 6 times to type out the letter C to like text to people and stuff. I know the like the old non-touchscreen texting style was pretty insane, but you can even see like their stock tanked down. And what happened to the phone industry? It just exploded. But what came in? Other companies like Apple came in and stole the show. Samsung came in and stole the show. And I feel like that with a lot of these companies that are out right now, there's obviously going to be a lot of competition coming. And it's always important to go back and look in history at some of these other circumstances, because like you said, Mike, it's very telling when you see some of these stocks like Nokia, Intel, Cisco fall so much from that .com bubble that, I mean, honestly, and then if we look at the growth heading into it, it's very similar to what we're seeing now out of some companies. So I don't know, to me, it's very telling, but, I guess time will tell and we'll have to see, but I just don't see Intel going anywhere. I think they'll at least hold their ground, and, even if they start doing worse, they probably won't go bankrupt in the end, at least. I know they have a lot of contracts and stuff, but I'm not trying to say anything like that, but either way, for the long term, it's so important to look at some of these other past events, Mike. And I can't believe that we're like in a similar situation with some of the companies now that we were in the early 2000s. Like that growth was insane heading into that drop. Yeah,
the main point is just comes down to that valuation. So like we gave with like the AMD and Intel example. Yeah, AMD's winning the technology race with Intel, you can say. We can call it that. But it's like, while that's true, if we scroll up to Hunter's message, Hunter said, let me see. Okay, yeah, so like AMD is worth more than Intel. It has 1/5 the revenue and 1/6 the profit. So it's like, yeah, while AMD's winning the technology race, are you really going to value AMD more than you value Intel when it has 1/5 the revenue and 1/6 the profit? That's a question only you can answer. Like if AMD really, really just continues to develop and just print money over the coming years, then maybe AMD is a good buy, right? That's just something that you have to analyze. Like if you think AMD is going to continue to just dominate the market that they're in and they're going to continue to grow, by all means, go buy AMD. But it's just like, keep in mind that look at their valuation relative to their competitors, because historically, I mean, it's just an important thing you want to do. You know, we're not trying to bash on AMD, but it's just like, we encourage you to look at that valuation, you know, compare it to its competitors. Is its valuation justified? And that's only something you can answer.
Yeah, and the same thing goes for NVIDIA. The same thing goes for any stock that's been moving up at like a 300, 400, 500% rate over the past few years. You know, like lots of these stocks, it's not just NVIDIA and AMD. There's a lot more that have been moving up like this as well. So definitely be careful with it. And we're in a crazy time. You know, we have a lot of crazy stuff starting to go on, and who knows, you know, maybe Russia, like if Russia does one more bad thing, who knows, it might start crashing the markets. And if that happens, then AMD and NVIDIA both might start selling back off to the downside. So we also have to keep in mind that there's a lot of short-term issues like that. And then also the Fed raising rates might hurt valuations as well, like we've talked about, especially in the overvalued tech sector. So yeah, it's going to be a crazy next couple of years, Mike. That is for sure, especially with AI and stuff being implemented more and more. So it'll definitely be big. And just kind of getting into some of these other stocks today, Mike, I just wanted to maybe hit on some of these defense stocks really quickly, because I'm actually seeing RTX climbing up my watch list. And I'll tell you what, RTX or Raytheon is having a pretty good day today. It's not the best, but it is running up in a decent way, and it's almost above the pre-market high of yesterday. And if we go look at like Lockheed Martin, it looks like they're actually moving up pretty well. General Dynamics is too, and even Northrop is moving. So looks like these defense plays we hit on in yesterday's video are doing very well.
Yeah, that's true. That is true. The defense plays are doing pretty good. I'm actually thinking about them for a potential play. So great call out there. We had a lot of comments talking about valuations. Muscle said, maybe a stretch, but what about augmented reality? Microsoft has its HoloLens headset, Apple uses ARKit, and Google presents holograms and AR Core. This is a tech that I feel will thrive. Yeah, I mean, I feel like it kind of has to do with the metaverse. You know, you could even say like Facebook with their, one, changing their name, but also their Oculus brand and all of their investments into the metaverse. But yeah, I agree, Muscle. You know, I think that industry will definitely continue to thrive. And it seems like a lot of the major tech stocks that we already have in the market today, like you suggested, Apple, Microsoft, Google, and maybe Facebook, are already investing into that industry in a pretty heavy way.
Yeah, they are, and that's a pretty telling thing. You know, like you said, even Facebook is getting into it. They bought out. I can't remember if they bought out Oculus. Did Facebook buy Oculus a couple years ago, Mike, or did they develop them?
I'm pretty sure they bought them out.
Yeah, I thought they bought them out too, but it's just such a big industry, and I know that VR going forward is going to be huge, and you know, I know it's going to be huge for the metaverse, and it's already getting pretty big, like in the gaming industry. You know, like I know that people are buying Oculus Rifts, and you can go play games like Call of Duty VR and like PUBG VR and all these crazy games right now, even like VR racing and stuff. So it's definitely a growing sector there. And like you said, Mike, that metaverse is going to get huge. Like we've been seeing, you know, there's a lot of talks of the metaverse lately. I've even been seeing movies lately featuring the metaverse. Lately over the weekend, I was at a family event, and I actually saw some kids watching a movie called what's it called? It's called it's Wreck-It Ralph. It's called Wreck-It Ralph 2. And in Wreck-It Ralph 2, the whole movie is set in the metaverse. And I was sitting there mind blown that I was watching this. And I've been seeing so many more movies like that lately too, with featuring the metaverse. And it's going to be a big sector. And some of these companies that are investing in it should do pretty well. And personally, like you said, Mike, Facebook is one of the biggest ones. You know, they're into Oculus, and they've been investing a lot into this lately. So, and honestly, they're at a pretty good price point right now. So I'd rather buy Facebook rather than buying some of these other stocks at highs.
Oh, yeah. Alrighty. So shout out Vicky, Muscle, and Hunter for the great information today. We had a pretty awesome stream. It's always good when we get some like nice debates going, Tom. You know, it gets everyone thinking, and Let's see. All right, so Vicky said, you jumped my comments, Mike. I listened to you guys, and you have to read mine. All right, so let's see. There's so many comments. We have Vicky saying, let's see, how many large companies were in the S&P 500 in 2000, and today they don't even exist. Intel cannot catch up. I'm going to find the material supporting that. It's not the amount of money, but product. And she's referring to Intel. They died because they didn't have the right product or didn't keep up with the technology. She mentioned Nokia. She's in telecom and knows a story about the Chinese government and how they are corrupt, and how Tesla have no money when they started, but delivered superb product, and they now have profit, free cash flow, and else, and the EV market that no company can catch up, at least for the next 10 years. I mean, I don't fully agree with those statements. While Tesla does have amazing technology, and while it will be hard to compete, we are already seeing many competitors get into the market. And I know that they don't have the same technology as Tesla, but another thing to keep in mind is, Tesla's stock really only started to rise over like the past 2 years. If we're being honest, like over the past 2 years is when Tesla really only had the attention that it has today, and that's when they became profitable. So it's like, at the end of the day, you can buy into a company that has a great product, but if they don't make money, their stock price will not stay elevated over the long term. Anything can happen in the short term. Tom, in December of 2020, I believe we made a video on QS, okay? At the time, QS, if we go back like 2 or 3 years, yes, exactly, December 2020, we made a video on QS. The stock was at $120. At the time, they had $0 in sales. Kind of the same thing what we saw with Rivian. You can have a company that has a great product, but if they cannot deliver if they can't deliver on that product and be profitable, their stock's just not going to go up. It's just how it works. Like, yeah, anything can happen in the short term. We've seen some crazy things, but at the end of the day, you need to produce profits and you need to be growing your revenue. And if that doesn't happen, then there's no it doesn't matter how good your product is if you can't sell it.
Yeah, that's very true, Mike. That makes a big difference. And QuantumScape is a really good example because it was this stock had so much hype at the time, and what was everybody saying? They were like, QuantumScape's gonna be the future. They're gonna obviously over the next 3 to 5 years be the next Tesla. Run from $10 up to $1,200 or something. But as we know, the hype always ends up dying down a little bit, and unfortunately, when the stocks start dropping, then investors start really changing their minds. So I feel both sides, Mike, and it's a crazy thing. Obviously everyone has their own opinions on the matters. Personally, I think Intel's fine. I'm someone who really researches computers, and I look at the architecture of their chips even and stuff like that, and they're definitely not bad. So while they're not as good as AMD because they're not in the graphics card industry, I still think though that they'll do okay in the CPU industry, which is good. So I think it'll be okay. But in the end, it's all just, honestly, a lot of it is opinionative right now. Obviously a lot of it is also trying to guess futuristic stuff that nobody really knows or has control over. So that's part of the fun in the market, Mike, is just having these little debates. Like you said earlier, it's really cool to kind of get a lot of good information like that. And like we always say, even in private, Mike, it's really cool to debate because, a lot of times you get information that you maybe would have never looked at before. So it's definitely a good thing. And hopefully in the end, honestly, hopefully they both end up going up. That would be best case scenario, in my opinion. And honestly, like in the next 5 to 10 years, I would think there's a good chance that both could end up going up, given all the technology that they're both getting into, to be honest.
Absolutely. All right, guys. Thank you guys so much for joining. Vicky said hit the like. Before we close out, I just want to personally thank everyone for joining. So huge shout out Muscle, Sean, Michael, Vicky, Alex L, Hunter, Trading Lifestyle, Kumar, Keisha, Hornet, Raymond, Iranical, Who else? Who else do we have? The other Alex, and let's see, and B Trading. Thank you guys so much for joining the stream today. We had a great time. As Tom said, we love these debates. It's always good to get the ideas flowing, and just like Tom said, when we have these debates, we can see other people's perspective and learn information that we did not previously have. So great stuff there. Thank you so much, George and Head, for joining too. And yeah, hopefully the market pops up, guys. The market's been crazy. But besides that, we hope you guys have a great weekend.